today we're going to discuss the uranium bear thesis as well as the bull thesis. We're going to debate this. I'm going to go over some really good data from experts in the industry. I'm going to give my take on it. And I really do appreciate you guys getting the last video to 1,000 likes. Now this video, I want you to tell me your like number, and do you see any of these bear thesis that I'm about to list for uranium happening? And will the bull thesis that I'm going to go over as well in juxtaposition outweigh any bear thesis or events that are going to happen that could happen down the road? We're going to discuss each one of those. And thank you so much. Hit that like and subscribe button below. Now, the first thing we'll actually go in before we get into this great write-up by John Quakes is I tweeted this out earlier. Now, this is not meant to foment or scare anyone. These events have not happened. Now, I do want everyone to be aware that these are things that potentially could affect the long-term nuclear sector as well as uranium. But a lot of these things I have rebuttals for, and I can really go into detail with data and show you how things aren't always going to be bad like they might seem if an event happens like this. And the biggest one is obviously a nuclear accident. And I want you guys to give your opinions below. Do you think any of this is going to affect the future? Could any of it happen? And a lot of experts, sometimes people are from, these areas or these fields, and they chime in. So it is nice to see. So definitely comment below. But the first one is a nuclear accident. The next one, I put China ends nuclear. There are 150 reactors. The next one, Greenland and Sweden, a very massive supply of uranium coming into the market. Another Kazatomprom type in the next, 5-10 years, which is very unlikely, but it is out there. So thorium and fusion, these type of energy sources in the future, will they be adopted versus small modular reactors? Kazatomprom production going over that crazy 73 million pounds a year. New megaton to megawatts program. Again, a lot of these are very unlikely, but they have held back uranium prices somewhat in the past. Some of these like that. Laser enrichment. What about laser enrichment? Could it affect and bring more secondary supply into the markets? See uranium extraction. And as I said, note that this list has not happened yet. So some of the other things, obviously the bullish stuff, I do want you guys to, we'll talk about these in a minute. 150 reactors, SPUT, the demand, the secondary supply getting wiped out. This supply risk from the largest producers out there, Kazatomprom, and obviously Russian allies. Alexander said Sweden will do a pilot project with SMR in the future, possibly in the next year. And by 2030, they will take a decision to invest in SMR. So just off the top of my head, I think Sweden has a 40% of their power is like from nuclear. I think it's over 6 nuclear power plants. For a smaller sized country, that is actually pretty good, but they do have pretty big supply. And Alexander did say, obviously, that the country is not a mining friendly country for uranium, especially. Now, the opposition has a prediction of about 8 to 10 years to have new reactors online. And they have heavy resistance, obviously, to change laws and other process to go through before they will make this happen. Especially establish a mine, that would take a long time to consider. So it's true. We have massive mines that have already been found, in other areas that are friendly, and they still haven't got those up. They haven't got the funding. I mean, look at Arrow Deposit. That's going to be a big one. It's not up and running. They know the future, better than anyone there. So it is going to be really tough. Other people, Greenland won't revive its mining. They could become incredibly wealthy from all their potential resources, but the people in voting against it every single time, anything like it is opposed. Someone did say, Ken said, are you not seeing that none of this means anything? The market continues to go to crap. Uranium is the worst to go down and people don't care. And I said, how so? The last year, if you look at, let's just say the top 25 uranium stocks, this is their performance. This is as of today. And then if you go to the top 25 NASDAQ stocks, I mean, looking at Facebook's, go look at their market cap. It's 13 times bigger than the entire uranium sector combined. That's including Kazatomprom. That's including the enrichers, enrichment companies like LEU, all these companies added together. That is 13 times bigger. So, I mean, look at their drops in one day on Friday was larger than the entire uranium sector. Some of these drops in the market cap. So how so when that's what majority of the people that invested had the most investors in these companies, that's what they look like. And then anyone that invested just a year ago, right when SPUT started, they are up this much. Why are uranium bulls so excited about Silex? This is still speculative. The stock has done well. A lot of people have asked me to cover it. I've covered it the past, like a year and a half, 2 years ago, and I was contemplating on investing in the stock as well. But I think LEU, still they're going towards HALEU. I think HALEU is probably a better route. All these new reactors are going to really want to use it, and it's still speculative. And as higher prices come up, it does not mean that this won't be a part of the cycle. higher costs and more speculative things when prices get higher usually become adopted or at least tried out. Only one realistic case, and that is an unlikely accident. So yeah, a lot of you really do think it's this accident. Some people have been fomenting, and I'm going to talk about fomenting in a little bit and show you a really crazy video. You probably won't believe it. A lot of you, every time I've showed you, especially in the Discord, this video, your jaw drops and you're like, how is this even legal? And we'll talk about that. And this could be happening a little bit with nuclear and uranium. Remember, it's all business and some crazy things happen. 2010 and 2011, most utilities actually started long-term contracts again. And this was right before Fukushima. We had record spot volume. And I don't think anything is going to stop that 700 million pounds that Kazatomprom has said is going to be coming back in the market. And look at this. So record spot volume here, 2009, 2010. We were going into the, obviously, Fukushima event in 2011. There was a big contracting, 250 million pounds, which was tied the largest we had then. So they were contracting right up and before Fukushima. And even with Fukushima, look at the contracting that was happening, almost 200 million pounds, and then boom, right off a cliff the next year. Obviously, a lot of this might have been done in January, February, March, right as Fukushima, right before it was starting. A year or 2 years later, there was still 75 million pounds contracting per year going into this, and almost 100 million in 2019. So we're back in this kind of drop-off phase here, and this 250 million, maybe more, is going to come back very soon. And since then, a lot of great things have happened, and it's a lot more safer. You said nobody obviously has a clue about what above ground inventories could be there, perhaps 150 million pounds. Somewhat of that is true, but the majority of every pound, in those barrels is accounted for. It's uranium, right? So if the market somehow has a ton come into the spot market, and remember, prices are going to eventually go higher, and Sprott Physical Uranium Trust is going to be buying up. They have 57 million pounds in less than a year. So they're going to take care of that over the next decade. Another thing, my main concern is that true price discovery in the spot market might not happen. If miners continue to reference spot and contracts, they may be left selling pounds at a price not reflective of any true transactions. If nobody contracts based on spot, miners may underprice. Now, this happened in the last uranium bull market. We saw companies, Paladin, sometimes contracting way too early, way too low possibly. But remember, this 700 million pounds that's coming back, they're going to contract far higher. They know it. Denison, they sold around $60, only a tiny 40,000 pounds worth. And Energy Fuels contracted 3 million pounds up into like 2026. We don't know those exact numbers for Energy Fuels, but these numbers are going to be a lot higher, not only because of inflation, but these companies know, the management knows. That's why we've seen the largest uranium producers hold off. They're not dumping stuff into the market. They know uranium prices need to go far higher. You did say big banks, props, desk spoofing, just like they do with gold. Now, I highly doubt that this is happening to the extent that you're talking about, because it's not really fiat traded, okay? This physical uranium that's bought in the spot market, this is real pounds. The names are slapped on there after, in converted, after they're actually bought up. The names change. It's not like a fiat type trade, okay? Now, futures in uranium also are tiny, man. I mean, 250 pounds of uranium, you can see there, it's very, very tiny. And I don't think that has really anything to do with what's going on. And we'll show you soon about fomenting and about, how this could be related to the uranium market. And in the long run, it is very bullish, but I'm going to shed some light on some stuff in a minute. So make sure you keep watching this video. This is just to discuss. I want you guys to know I'm not a uranium talking head. I don't get paid to talk about uranium stocks. I love and enjoy this. So I talk about both sides. I like to debate it. Christopher, you said overall market crash pulling down uranium equities. Honestly, once that price gets up, it's not likely. We look at 1970s, uranium ran 700%. We had market crashes. We had highest record inflation. We had the highest rate rises. We had an energy crisis. We had uranium cartels. We had the craziest stuff going on. So yes, they could be pulled down to an extent. When prices start coming in, it's going to run up the stock prices. Other people, I'm from Sweden, and that is not likely to happen at all. For many years to come, yeah, I don't think they're going to get any mines up. World War III, I do have a rebuttal on that. World War III, countries do still need energy. They need uranium. And usually countries go into a record revolution of industrializing the military complex. They need not only nuclear weapons if there's World War III, which uranium, they need power, okay? So Is it? And that's the best form of power, really baseload, especially if you're having issues. You don't need solar. If there was ash in the air and you don't have, wind as much as well, you still have nuclear. That's why nuclear will always prevail over everything. Deep space, nuclear prevails. Gives you heat versus solar. The dust on there, the panels can get screwed up. You have the reactor inside. It can produce heat and run all your vital equipment. So that's why NTPs are probably going to be a big part of the future. They're double the speed too of a normal propulsion system in space. Alexander, you said, but to remove the ban, it will take a couple years. That's true. Getting a mine up takes 10 plus years. You're from Sweden, but the near-term bull market, it's impossible for this. And I pretty much agree. Now we'll go into a nice write-up. And this was before the war in Ukraine that John Quakes, you guys go check him out on Twitter. This is what he wrote up. Now, I won't go over the bull aspect just yet. We'll go over the bear aspect, and then I'll show you that video that's going to make your jaw drop, okay? And what could be happening with nuclear and uranium potentially recently. So Quake said, and I'll give my comments on each thing. Like I said, a lot of things have changed, and he might have changed his ideas on this as well. So as uranium is a cyclical commodity that goes through boom-bust cycles, we've said that before. Based on changes to supply and demand, we can approach the question, what is the bear case, by looking at both sides of the equation separately. I love it. By data, right? So on the nuclear demand side, the obvious potential showstopper for the uranium bull market standpoint would be another major nuclear incident. However, whether such an event derails or instead temporary delays the bull market boom cycle is another question. With 440 reactors in operation and another 57 already funded and under construction, a nuclear accident would have to be significant enough to lead to the shutting down of dozens of operational reactors and suspension of cancellation of many new reactor builds in order to put an end to the uranium bull market. Mine supply is in such a deep deficit that only a severe drop in nuclear demand will prevail a rise in uranium prices. A minor nuclear accident lacking in catastrophic outcomes would not likely be sufficient to change the trajectory of uranium prices today. Since Fukushima, billions of dollars have been invested by Japan and other Western nations to undertake engineering studies, upgrade reactors, and improve safety and security. So the likelihood of major catastrophic nuclear incident is lower than now than it was a decade ago. And I totally agree. And I think Quakes could probably say, and I'm sure, and I've seen him say some of this, that it's very unlikely that there is a meltdown with the Z plant there in Ukraine. And even if there was an issue there, remember, this is a war zone. These things happen. Just because there's a car wreck does not mean that all cars are going to be banned, especially if it was during a high-speed chase, right? If it was a high-speed chase, people would understand that there's going to likely be a wreck or a big possibility. It doesn't mean that the car necessarily is not safe. You've seen the high-speed chases where cars have zero wheels going and the guy's going 120 miles an hour on a freeway, yet the car is still going, right? And the car flips over and the guy gets out and runs. It kind of highlights the safety of the cars now. A lot of them, the Volvos, they're very safe. So not to get off on a tangent, I do believe that it's very unlikely that it ends this. And just as we saw in that chart earlier, the last uranium bull market, when the bear market happened, they were still contracting. The price of uranium did a record run, 2010 into 2011, 250 million pounds contracted. And then, if that had not been contracted, the uranium price after Fukushima might have went up if that had not, they not front end ran the contract pricing and ran spot up. Because remember, there was record 250 million pounds right beforehand. If that happened after, people probably wouldn't even have seen Fukushima as much of a uranium downturn and blamed it on Fukushima. And that's just my take on it. You can just look at the way things went with the price of uranium. And, it was an odd time, but I think that we're way better now since that. Now, a bearish event, and we touched on this earlier, on the nuclear demand side would be a decision by China to abandon its accelerated nuclear build program or cancel its plan to improve reactor construction projects. Now, we said this earlier. It's very unlikely those 150 reactors or future reactors are not going to come up. It's very unlikely that China shifts to another type of energy source especially for the future, because there's an energy crisis going on. Similarly, a decision for the US, Europe, India, and Russia to withdraw support from their nuclear industry, retire nuclear power plants early, abandon plans to life extend the current reactor fleet of 80 plus years, or any major global shift in sentiment away from nuclear could put a downward pressure on demand. We've seen the total opposite just in the last few months. In fact, we're talking about Germany restarting reactors and extending. We're talking about California, of all places, extending Diablo Canyon. So that's highly unlikely. And as it stands today, there are no signs of that happening. Totally agree. What if nuclear fusion to replace world's fission reactors? So fusion is still in the infancy, and once successful, the industry could take a decade or longer to prove up its new technology. New technology always has to be proven, right? And it takes so much to change the infrastructure. It would be great, and sometimes there are better options just to use the old way of doing things, just the way they work. Because say there was a better form of energy for the US, to replace the entire grid, it would cost way too much, and the negative effects would far outweigh the positive from switching in the long run. Now, once these infrastructure 80 plus years down the road, maybe. Now, develop these necessary regulatory frameworks also takes time. Other thing is establish safe and proven operating guidelines, build and demonstrate a working commercial unit that harnesses the heat of the sun in a small reactor footprint that is not a risk to the environment and humanity. I mean, it's crazy the amount of power these things have. They're like 1,000,000 times hotter than the sun. So there's big risk there as well. In my view, as Quake said, we are at least a decade or two away from achieving that goal. In the meantime, all existing fission reactors will continue to operate and more will be built. The global nuclear industry has invested trillions of dollars to build, maintain, and fuel the world's fleet of reactors with uranium. No matter fusion's hopefully successful future, a global fleet of fission reactors must stay in operation to meet rising demand for carbon-free electricity in an energy transition away from coal and gas to zero emission and clean energy. And remember, this was really before that the major energy crisis and the war really started again. So it's even highlighted more now. And on advanced nuclear technology, the current bull market setup does not rely on the mass deployment of SMRs, right? So any movement away from the SMR or failure to deliver on expectations would do nothing at all to change the uranium supply dynamics as they are today. Similarly, a deviation into alternative fuels for these new reactors by 2030 does nothing to change the uranium supply versus the demand dynamics in the current decade. And it's true, we really haven't priced in SMRs. And when small modular reactors get up and going, and we're seeing 70 plus out there designs, it's going to increase the demand for uranium. It's going to increase the demand for nuclear, because countries are going to want to throw these new reactors up very quickly. Quakes did say the uranium supply side, it is more difficult to assess due to its inherent lack of visibility. As we said before, we don't know always the contract prices. We don't know how many pounds could be coming up in the future. We just know just the statistics we have right in front of us. The way I look at the uranium market a lot of times is looking into space, and you see stars and you see them far off. And if you're going to determine something about space just based on the past, that light took sometimes billions of years to get here. So it's likely that those stars are already burnt up by the time you see it, especially a retail trader. By the time they hear about it, a lot of this data, before it becomes mainstream, things change instantly. So the bear case that sits at the top of the list has been around for many years, since well before Kazakhstan moved to privatize its uranium mining industry, create a Swiss trading arm to transition to long-term contracting and initiate a value over volume strategy of year after year flex downs in supply. The argument is that Kazakhstan will simply ramp up its production, remember that 73 million pounds or more, to fill the supply gaps, thereby preventing any further upward movement in uranium prices. In the pre-privatization era, that might have been a potential showstopper, but is it today? Kazakhstan currently resources and production capacity is assigned an upward limit of 73 million pounds per year, as reported by the IEA. That's just 15 million pounds per year above its current 58 million pound flex down, which they've already flexed down again 2023, 2024. So that is just an extended through to the end of 2023. Even if Kazatomprom were to take the irrational business decision to invest hundreds of millions of dollars to flex up production to achieve that 73 million pounds per year maximum, which would inevitably push down uranium prices, punishes its bottom line and eliminates its dividend, it would still not be sufficient to fill the multi-year sustained supply gap that will continue to worsen over the coming decade. The recent civil unrest in Kazakhstan has also underscored how fragile uranium supply has become as production is concentrated in so few nations. And these nations are Russian allies. Kazakhstan produces more than 40% of global uranium and now has heightened geopolitical risk as its government is replaced. Russian troops are called in to protect uranium mining infrastructure, and the president suggests imposing higher mining taxes and further privatization. Even if Kazakhstan chooses to increase uranium production, will nuclear fuel buyers sign up to purchase it given the heightened risks? I doubt it. We're already seeing, as we talked about earlier, Sweden, their biggest energy company, actually ended contracts with Russia this year, okay? Getting enriched uranium for their reactors. They ended that. They actually said they're not going to be buying any more enriched uranium from Russia. Another bear argument is that there is plenty of excess inventory to keep uranium prices low. The data tells a different story. Nuclear fuel consultants estimated around 30 million pounds a year of mobile inventory is available to sell into the market back in 2018. Since then, nuclear utilities have drawn down their inventories to near historic lows. The two largest producers, Chemical and Kazatomprom, have let their inventory levels fall to rock bottom and are buying material in the spot market. They're competing with spot, and they're competing with now going to be this overfeeding. So it's going to get crazy. And producers, the physical funds and hedge funds have been mopping up available spot market pounds. China's CGN Mining just signed 49% offtake with one of Kazakhstan's largest mines to help keep China's growing demand. Kazakhstan and Chinese nuclear fuel suppliers have signed an agreement to build a 60 million pound uranium trading hub. You know, we talked about that before. And storage facilities along their shared border, which will be filled with uranium mined in Kazakhstan. A sign of excess inventory would be sustained low uranium prices, but the spot U3O8 price has risen 150% from its November 2016 decade low. That would not be happening if inventory levels were high. And I totally agree. He goes on to say that last year, 2 major uranium mines closed in Australia and Namibia due to depletion of their deposits. At current uranium prices, there is little incentive for any nation to increase its uranium production capacity. Brazil has announced that it is moving ahead with the plan to open a new uranium mine by 2022 that will provide about 500,000 pounds per year, enough to fuel its 2 nuclear reactors. Russia is asking Rosatom to renew efforts to bring its proposed Elkin mine into production, seeking a 2025 production start, eventually ramping up to 13 million pounds a year by 2035. Berkeley Energy has been trying to move its mine there, that's in Spain, but Spanish government has denied their last needed permit, killing the project. And Global Atomics, GoviEx are moving ahead with the construction of the new mines in Africa, and as well as Vimy Resources, which now Deep Yellow has in Western Australia. But production is set to potentially come online no earlier than 2025. There are no new major mines coming online anytime soon. Now, since then, some of this has changed. And one of the things is a lot of U.S. producers, we have this nuclear energy renaissance. A lot of mines, these ISR mines in the U.S., I think are going to come up. But this is not going to be a bearish thing. This is going to be very bullish, especially for your uranium stocks, because I think the prices are going to go higher. It's going to be a piece of the pie that the U.S. producers are going to get when these contracts start. And these ISR mines, they can be lower costs, but the U.S. leaders in these uranium companies are not going to contract for dirt, Kazatomprom, dirt low prices, okay? They know it needs to go higher, and they want to sustain this bull market as long as they can. And Quakes did say there are some potential new players that could enter the uranium mining space. And that one of those is Saudi Arabia, for example, plans to build 17 gigawatts of new nuclear reactor capacity as it joins the UAE in transitioning away from the using of fossil fuels for power generation. They are now actively searching for possible uranium deposits, employing geologists from China to carry out extensive surveys looking for uranium to power their future reactors. So the quantities located are small and will require significant new investments to become mines. These surprise elements on the supply side are always a possibility, but once again, history has shown that it generally takes 10 years, a whole decade or more, new discoveries to be transformed into producing mines, putting them well beyond influencing today's estimated 65 million pounds per year primary mined uranium supply deficit. Guys, there's major mines like Arrow that aren't even going to be up probably in the next 5 years. These are mines in great friendly locations for the government from permits, yet they're not up. They're not going to get up. It takes a lot of money. It takes a lot of time. Bearing some miraculous increase in mined uranium supply, the other sources of supply that could potentially be in secondary supply or some unknown hoarded inventory, that's what we talked about earlier, that a uranium player decides to release into the markets. The consensus level of secondary supply at the present is pegged to around 24 million pounds a year of U3O8. Equivalently, nuclear fuel consultants say it is expected to dip to 20 million pounds or less by the end of the decade. Now, something that's changed drastically, and I'll show you on my chart here, I created this. This is the overfeeding that could be happening from Honeywell. This is secondary supply. Just the overfeeding from Honeywell is going to wipe out the secondary supply. This is also Russian underfeeding, tails, re-enrichment, bunch of other things. That's this mark right here that I have on here. And you can see that when this overfeeding happens, it's going to knock out majority of this secondary supply, which was really in 2010. Look at the Russian stock, the US and domestic energy source stock. Look at just pretty much how it dominated the secondary supply. And we can see producers now, Kazatomprom takes a big part of that pie up. This is at risk. So is Russia. Look at Sput. This is the green one. This is how much they took out of the market. Do you understand how much this is? Do you understand the future? That is why, even if there is some more secondary supply, it's going to get mopped up. This green here and this red here, they're going to suck up as much uranium out of the market yearly as they can. Okay, they will be needing that. Now stick with me. We're almost done with this. Only a page and a half left. And then we are going to go to the video that's going to drop your jaws and you're going to question everything in the entire market. But it's going to make you more bullish likely on uranium. Japan has long been argued as a potential source of uranium to be sold into the market, but the evidence has shown that little to none as they have begun restarting their fleet of reactors. And this was before. Japan's looking to just restart 9. This is before that Quakes wrote this. Having invested in large inventories at much higher prices, and remember, I told you guys they invested $1 billion in uranium recently, and a lot of this fuel was resourced fuel from these recycled fuel rods. Now, Japan, although these restarts aren't going to pull uranium out of the market, a lot of this excess supply is going to be used for their reactors. In large inventories that are higher prices, and the majority of that inventory already in the form of fabricated fuel assemblies that are custom made for each unique reactor. Japanese utilities would be hit with considerable losses if they choose to disassemble and liquidate their holdings. While with Japan moving to restart even more reactors and achieve a higher nuclear contribution level to achieve its own net zero carbon emission goals, it seems more likely they will continue to hold on to most available fully paid for inventories to fuel their restarted reactors over the coming decade and even more uranium as more units are restarted. Now, on secondary supply, the major sources have been underfeeding in the uranium enrichment process and re-enrichment of depleted tails. Quake said, I'm no expert in this area, but my research shows that where there is a lack of demand for enrichment services, the enrichers will use that excess capacity to underfeed at the front end of an enrichment order. So that's already happened, right? And then sell the unused feed in the spot market or offer it to customers as a feed source at the market prices within enrichment contracts. So that's what was going on in the last decade, at least 5 years. Now it's going to overfeeding, which means they need U3O8. The key factor is that it is not technically possible to simply shut down centrifuges to save money. For technical reasons, they must keep them spinning. Enrichers can recoup their added power costs by underfeeding or reprocessing depleted tails to give the material to sell as a way to generate offsetting cash flow. If nuclear utilities continue to delay their contracting for enrichment services, then underfeeding and tail re-enrichment will continue to produce secondary supply to dampen uranium price rise. However, a rising SWU enrichment price and an expected rise in contracting after years of delay is anticipated by the majority of analysts and nuclear fuel consultants to lead to a reduction in those sources of secondary supply over the coming years. And this has already happened. Since Quakes actually wrote this, we've had a dramatic shift. Now it's overfeeding starting. We're restarting Honeywell. We're going to see that overfeeding start. And the prices, the SWU prices, UF6, these have been going up. Next in line is the U3O8 price they're going to need for this overfeeding. Another thing, and this is highly unlikely, and I'll give my rebuttal for it, a possible bear case is that to sideswipe the recovery in uranium prices will be the announcement of another megaton of megawatts program, as I said earlier, by the US or Russia. This would involve the downblending of weapon-grade 95% enriched uranium to the 5 to 7% levels needed to fabricate reactor fuel. This was done for 20 years from 93 to 2013. This is what really dropped uranium prices as well right after Fukushima. I think they were getting rid of the last little bits they had, and acted as a vital uranium mine producer, basically 25 million pounds per year, right? Fueling half of the US nuclear reactor fleet for 2 decades from the Soviet nuclear weapons. If some new decentralization effort were to emerge, then this could happen again. But as things stand today, it seems highly unlikely in the current political climate between China, US, and Russia. There is no way US, Russia, or China is going to give up any more of their nuclear. In fact, they might be looking for more highly enriched uranium to make more. We are in a new Cold War 2.0. And they produced more weapons during that time, right? And I really doubt that the countries are going to use them. And we're almost done with this particular thing. Another possible bearish event would be the emergence of new inexpensive technologies that can be used for converting nuclear waste and stockpiles of depleted uranium into nuclear reactor fuel. Now that MOX refueling, Japan loves to, they are investing a bunch into that. They love that. Now it is not necessarily long-term bearish in my opinion. I think that a lot of this stuff, companies, and Quake said a lot of these things are going to take a lot of time if they even happen. Companies are working on this laser enrichment technology. Remember, this is still speculative. It's, not likely to come during this uranium bull market. If they're successful, they could produce more secondary supply to meet reactor fuel needs. But as it stands, the process involves a very expensive and still many years away process. Mining raw uranium, then converting it, enriching it to reactor fuel using the established nuclear fuel cycle is the cheapest way to go right now. When uranium prices spike far higher, as I said earlier, expensive sources of secondary supply do become more economically viable, but that makes this bear case dependent on there being a strong uranium bull market in the first place. Next, what is thorium and a replacement fuel? Thorium has been promoted as an alternative reactor fuel, but to this day, it has not taken off in commercial use. So the jury remains out on thorium reactors as being economically or practically viable. The global nuclear industry has invested trillions of dollars, as we knew earlier. So basically converting the nearly 500 operating reactors to operate on a different fuel is just not happening. There is no substitute for uranium today. However, thorium is being considered for many small modular reactors in the future, so it could see some demand emerge as recycling of spent fuel and the industry moves towards a closed fuel cycle. So some will point out recent news that uranium can be extracted from seawater. This is another thing. These are these really highly speculative, high costs. Some have said this could be bearish in the future, but so far only a few small quantities, grams of uranium, have been successfully extracted from large quantities of seawater. Guys, we can also use seawater and filter it for regular water. And here's the thing, and this is my analogy. In the whole world, majority of the world, unfortunately, the populations, a lot of poor populations, do not have fresh, clean drinking water. Water is 70% abundant on Earth. Although majority of the salt water in the world, we can filter it. It's not viable. It's not economically viable for them to do this. So just because there is a source of uranium out there doesn't mean that they could take advantage of it. It's not like gold. Pounds in the ground does not really equate in the long run to reactor fuel. Anybody can mine gold, but only a few experts in the world can mine uranium and produce it during the whole fuel cycle. And as Quake said, the likelihood of this emerging technology is in its infancy today, becoming a supply disruptor for this decade. Though future prospects are encouraging along the path to make nuclear a source of renewable energy, developers recently acknowledged that it takes more energy to extract uranium from seawater than the energy that it's extracted that uranium will actually produce, right? So it's not economically viable, and it probably never will be. There are always going to be possible geopolitical events. So with the geopolitical risk, it really highlights the fact that we need domestic supply of uranium. We need to start producing 30, 40, 50 million pounds of uranium a year for these new reactors coming up in the United States alone, like we did in the late 70s into the 80s, 40 plus million pounds. And as Quake said, history shows us that things rarely go as planned, which I believe further strengthens the bull case investing thesis for uranium to be a rock solid commodity for investors this decade. Jurisdiction risk has certainly become more prominent in the recent times, with potential delay or completely derail a new mine project, as happened in Spain, that mine, right? African nations are moving to increase state ownership of mine projects, and mine workers are demanding higher wages. We saw this. Namibia, they're wanting higher wages. Kazakhstan, their inflation is going up to record highs. That's what caused these riots. Indigenous people in Australia and North America, they're both becoming more vocal on protecting traditional lands while seeking better access to jobs and economic benefits that flow into new mine projects. These mines, even in in the best place in the world, the highest grades, Athabasca Basin, they could be held up in litigation for years, and they have been because of these tribes. These tribes don't necessarily always want a mine up. They don't want things going on, especially from a company that transitions from gold that has not even been there, right? That has now wants to mine. Former Soviet bloc uranium producing nations such as Kazakhstan and most recently Ukraine are seeing rising levels of Russian influence and intervention. These risks can have a profound and direct negative impact on specific uranium producers and future mine developers, which is bullish for uranium, right? While at the same time introducing further delays and disruption to future supply, which will lead to even higher prices for uranium and associated equities in general. Having a well-diversified portfolio or investing in uranium ETFs with global exposure producers, developers, explorers, and physical funds is the best way to avoid company-specific risks. Now, I do agree with that to some extent, but I think if you do your homework and you go with a company that has permits, the management is winning, obviously getting new assets up, and these companies are supported by the government, and they have a big upside because they haven't contracted yet. They have like I said, they have these permits and ready to go. Like a lot of the US producers, these are probably better and safer investments. Guys, this was John Quake's take on it. But as Quake said, this is just the data. We're talking about it. Now we're going to move on to the bullish things. And I want you guys to know that even in uranium, and especially in uranium, there are big name players that foment, okay? And I've never been paid to talk about a uranium stock, to talk about a certain subject. I talk about what I want. But Jim Cramer admitted in a 2006 video, and I'll play this video in 1 second, how the game is played. Now, the game of uranium, there could be manipulation. There could be articles being posted. I do see a lot of negative things coming out, especially fomenting with plants in Ukraine, how they can melt down. We know experts have said this is not possible, but a lot of this stuff could be paid fomenting, and it could be by companies that are not only invested in uranium that want cheaper prices, that could be utility companies out there, or those invested in them. We saw in the 70s a uranium cartel that wanted to come together and manipulate the prices of uranium. These cartels probably still exist. There are uranium talking heads, those with big warrants that will talk down a stock sometimes, that will talk up a stock, and just so happens you look at the warrant history, they loan these companies money sometimes. Or they'll talk down companies that they don't have warrants in, that they don't have a stronghold in, that they can't ride free in the uranium bull market. So these are things they do. They can also short certain stocks. Now, uranium, the physical uranium is a lot harder, and it's not like it is easily manipulated as like silver and gold. There could be funds out there dumping small portions of uranium back into the market, lowering the prices, and usually these companies are likely loading up either on uranium stocks, or they could be wanting to short them. You never know. These companies could be invested highly in solar. A lot of these people that are against nuclear are invested in other forms of energy. They know energy. They're invested in solar. They're invested in wind, possibly oil and gas. We saw negative oil prices, guys. It's not a conspiracy. Oil went negative on April 20th, 2020. And 2020 was a crazy year, right? Negative oil prices. What happened a decade before that? Deepwater Horizon. I was in the Coast Guard. I helped out with that. There was a BP oil spill. What date did that happen? April 20th, 2010. Okay. And it might have been a coincidence, but why would oil go negative? It's because there is manipulation in the market, and this video is proof of how it happens, and it could be happening to uranium. And I enjoy this, and I want to shed the light to you guys and give you the facts. Now watch this video, and you guys comment below and let me know, what do you think of this video? Is it happening in uranium? Are any of these bull market or bear market things going to happen with uranium very soon?
Welcome to Wall Street Confidential. I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again, today we have the misdirection from the futures. The futures pointing to an up market, and as of right now, stocks are down again. Is this just because it's the holiday period that we're seeing this?
A lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. Maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need 10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. It's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Yeah.
By the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were managing your hedge fund.
Right.
Do you think that does that exacerbate the moves, or does it make it tougher?
Well, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now you can't foment. That's a violation of
foment.
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now.
I don't get it. Why are they confessing?
They're not confessing.
They're bragging.
This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment. If I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today. So you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for that might cost me 15, 20 million. Annie, to knock RIM down, but it would be fabulous because it would beleaguer all the moron longs who are also keying on research in motion. So we're seeing that. That's again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today, and if you're not doing it, maybe you shouldn't be in the game.
Okay. Another stock that a lot of people are focused on right now seems to be Apple.
Yeah, Apple's very important to spread the rumor that that both Verizon and AT&T have decided they don't like the phone.
Right.
That's a very easy one to do because it's also you want to spread the rumor that it's not going to be ready for Macworld. And this is very easy because the people who write about Apple want that story. And you can claim that it's credible because you spoke to someone at Apple, because Apple doesn't.
Right, they're not going to comment. They're not going to say.
So it's really an ideal short. And I would, again, if I were short Apple, I would be working very hard today to get that. And the way you would do that is you pick up the phone and you call 6 trading desks and say, listen, I just got off the phone with my contact at Verizon. He has already said, listen, we're a Lucky G house. We're a Samsung house. We're a Motorola house. There's no room for Apple. They want too much. We're not going to let them in. We're not going to let them do what they did to music. And, I think that's a very effective way to keep a stock down.
Right.
I might also, by the way, because the stock at 84, 85, a little bit of capital, you go buy some January 80 puts that makes it look like there's going to be something going on. So maybe you give Morgan an order to buy 1,000 Jan 80 puts, then you go position limit with, you use a firm that doesn't know what the heck it's doing. Maybe you go to UBS for puts. And you just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer UBS, and then they call Pisani again. You have to use those guys and say, listen, I see a big buyer puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, nobody else talks about it.
Right, but what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate? Is that you would do these actions.
So you're talking about the mechanics of the market.
Well, the mechanics are much more important than the fundamentals.
Oh, okay. Well, but in terms of the fundamentals, you've been writing about how you
Who cares
think
about the fundamentals? Research in motion just blew out the quarter.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
Now, look, over maybe 2 weeks from now, the buyers will come to their senses and realize that everything that they heard was a lie. But then again, Fannie Mae lied about their earnings for $6 billion. So,
right, and Bristol Myers lied.
It's just fiction and fiction and fiction. And I think it's important for people to recognize that the way that the market really works is to have that nexus of hit the brokerage houses with a series of orders that can push it down, then leak it to the press, and then get it on CNBC. That's also very important. And then you have a kind of a vicious cycle down.
Right.
And it's a pretty good game. And it can be played. You can pay for a % or two.
Right, and then do you get long before Macworld and the expectation that the
Yeah, because
iPhone
you
is going
drove
to
it
be
down.
good? Right, and then you go back,
You
flip to the
certainly
long
got to
side.
use the other side.
Interesting.
Yeah, and there's a case where I would say the January 80 puts can be justified because after I've knocked the stock down to 80, I can buy a lot of common. And then you play it right into Macworld where they'll probably introduce the phone and Verizon's going to take it.
Okay. Well, maybe the fundamentals don't matter, but Fed, the numbers out today weaker than expected.
Oh, so
PC
what? The Fed has obviously got to cut. But
They've
you know,
got to
again,
cut.
you call the various guys who cover the bonds and you say to ignore the bond action. What's really happening is the Fed is very frightened about, and then you gin up the number that they're really frightened about. The Fed is actually desperate to try to figure out, how quickly they have to cut without looking like dopes that they raised.
Right,
in
because they've
May.
been talking about they're worried about inflation all this
You
last
don't
few
want
months.
to. You don't want to raise in May and then cut in January. You look like Mexico, for heaven's sake. I mean, this is like a distinguished group of people who went to really good schools.
Right, these are smart guys. Absolutely.
Yeah, they don't want to look like dopes.
But when we were talking earlier in the week, you said you think it would be some sort of crisis, possibly Ford being a trigger.
Well, Ford went and did all that. They pledged all this investment banking to all these guys. So now that they're very reluctant to say negative things, it makes it much tougher for the Ford story to play out. I mean, the amount of business that Ford has to do. Ford might be the big client of 2007. So if I were in the corporate finance room, I would say, listen to the research guy. I said, listen, I spoke with Mullally. I actually have the inside. The plan works. So then you're the research guy and you say, oh man, what do I do? It's bonus time. I'm not going to be a total idiot. Spitzer's going to Albany. Let's get back in the game.
Right.
I think that's important.
Is it possible? Because a year ago at this time, a lot of people were saying GM's about to go bankrupt, and of course the stock's up 50-some-odd%.
Well,
Could Ford be that stock?
They're
57,
GM. No, but
57?
GM, the difference between Ford and GM is that GM's balance sheet was never really, it turned out wasn't that bad. Ford's balance sheet's pathetic. And you know that because they were willing to screw over the common for the bonds.
Right.
That's kind of, if it weren't Ford, if this were Qualcomm, we'd be saying Qualcomm is desperate. But no, it's Ford.
But it's
so we
Ford.
say
It's an American icon.
Yeah, I
and
drove
so,
a
right.
Ford. I owned a Ford once.
And this is our country. Well,
Yeah,
this has
right.
been Jim Cramer. Wall Street
Again,
Confidential.
what I'm trying to go for in the Wall Street Confidential, and I'm not saying you're sending me, I have to talk about what it's like at my hedge fund, okay? And what other hedge funds do. Because the difference is that if this is an intraday show, and you need to know what I know is going
Right.
on. Now, we step back. Research in Motion was a real blowout quarter. It was a really good quarter, and I was quite surprised how strong the margins were. It looks like the other guys have really dropped out. It's a terrific story. Should it be up 6? Yeah, I think so. But look where we are. It's Friday. You got 5 more days to make your quarter.
Right.
Can you really risk having RIM up this much? I don't think you can.
Now that video is just proof of what's going to happen possibly during this uranium bull market. What's been happening. People have been saying Germany now sees a tidal wave shift in the sentiment towards atomic energy again. But they're actually saying all these pumpers in uranium, they're wrong about this. And it's just this fomenting in the market. It's really an Eastern play. Germany is just one caveat to the full fuel cycle. It just shows a sentiment shift. And with what's going on in Ukraine, it is possible that a lot of that is being used to drive down the prices of uranium stocks or the prices of uranium. But it is a little odd that uranium has actually stayed where it's at. And I think it is because this long-term contracting is coming back and refueling cycle could really be it. To finalize this video, I want to go over the bullish cases for uranium that are going to far outweigh any bearish cases. And I want you guys to comment and let me know. I just tweeted this out. So 150 new reactors from China. We know this. SPUT secured that 38 million pounds less than a year. Boom, done. This is going to continue to happen in the years to come. More SPUT taken out of the market. Demand of over 200 million pounds. Kazakhstan also signaled that them cutting down 10% is signaling that there'll be less supply coming to the market, but they did say they're signing long-term, mid-term contracts. It's very bullish. They said 700 million pounds are coming. Honeywell 2023 demand wipes out this secondary supply. 2023 demand wipes it out. 700 million pounds of contracting, like I just said. Russian and Kazakhstan supply is at risk. This is Kazakhstan. US nuclear revival. This is probably one of the biggest, wild cards out there. The US coming back into the market, buying uranium, buying billions of pounds, investing $4 billion, maybe more just in enrichment process, tens of billions of dollars in future uranium supply and enrichment. And finalized by looking at the past, it is unlikely that even a nuclear event that could be very bad is going to stop this type of contracting coming in. Okay, this front loading of contracting happened right before Fukushima, and there was still major buying in the long-term market after Fukushima. And you can see even the spot market steadily held. It didn't go to zero. Now, I hope you guys enjoyed this bearish and bullish outlook and debate on uranium. Let me know below in the comments, are any of these bearish or bullish events gonna happen? Are we gonna see a big run very soon? Give your like number below. And by the way, last video, we did get 1,000 likes again, so thank you so much. Thank you for watching the whole video.